US President Donald Trump yesterday scrapped the Iran nuclear deal signed by his predecessor, President Barack Obama. The 2015 deal with Iran ended its economic isolation from the rest of the world and also, of course, its isolation from India. But now, with the US reimposing sanctions on Iran, India faces the following problems. One, it imports about 500,000 barrels per day of crude from Iran and is Iran's second largest buyer, often in exchange for attractive discounts, longer dated payments. Second, India has also signed up with Iran to develop the port of Chabahar, which allows India access to Afghanistan and Central Asian countries to counter, of course, China's access to these regions from the Pakistani port of Gwadar. Also, as of now, US has walked out of the deal, which the other signatories, including Iran, China, Russia and Europe, say they still respect. So does this provide India some wriggle room? To discuss this issue further, our former ambassador to the WTO, Jayanta Dasgupta, and former Indian diplomat and expert in foreign affairs, Rakesh Sood, joining us. Also joining us is Mark To of Wing Fung Fund Financial Group to discuss what is the impact on crude prices, an important import item for India. Gentlemen, thank you very much for joining me. Well, Mr. Sood, let me start with you. First up, is the deal dead at all, considering that the other signatories to the deal have openly said that they intend to still respect the deal and are probably negotiating with the United States? Do you think we should really worry that sanctions are at our doorstep?
Well, sanctions are at our doorstep, and it is quite clear because the National Security Advisor, Bolton, he said that we are not going to go back to the Security Council for the automatic snapback of sanctions, which is provided for under the JCPOA in UN Security Council Resolution 2231. In fact, they've already issued instructions and Treasury has already come out with notifications indicating that by about the 6th of August, they expect dollar payments to more or less dry up, and by 4th of November they will be targeting Iran's oil exports. And clearly, as happened last time when sanctions were tightened, they will be looking at significant reductions by key buyers of Iranian oil. So I think we are going to see that happen very quickly, and I doubt if the Europeans will be able to come up with a coordinated strategy at this late stage. I think they've left it too late.
Oh, what about China? I mean, they already, both European Union for that matter, and China are already locked with the United States on other trade issues. You won't see a more belligerent China this time, well, Mr. Sood?
You might, but China has other angles in its complex relationship with the US. We are going to see some developments with regard to North Korea. The Chinese Prime Minister Li Keqiang is, as of today, he is in Tokyo having a meeting with President Moon of South Korea and Prime Minister Abe. As you know, day before yesterday, on Monday and Tuesday, Kim Jong-un of North Korea paid a second surprise visit to the city of Dalian, where he had meetings with President Xi. So there are many angles there, and even now the initial sanctions that were announced by Trump in the so-called trade war with the European Union and with China, certain waivers can be worked out, but I'm not sure if those waivers will necessarily include India. So the Indian waiver will have to be worked out separately, if at all we are able to do that with the Trump administration.
Okay, I'll come to the waivers in just a bit, but let me ask Mr. Jayant Dasgupta about how trade is different now compared to the pre-2015 period. There is a lot of renminbi-denominated trade happening in volume, yuan-denominated trade. Do you think that volume of trade can still go on, even if US sanctions apply, what do you think, Mr. Dasgupta? Do you think China will continue to buy from Iran?
I feel that there are two aspects to this. As compared to 2015, pre-2015 position, our exports and imports from Iran have improved quite a bit. We have exported about $2.5 billion worth of goods and $9 billion worth of imports of oil, and another $1 billion of imports of various kinds of chemicals and fresh fruit, etc. from Iran. Now, before 2015, there was this problem of payments. And we had an EDF account with the Exim Bank, and we were, and of course there was another nationalized bank which was maintaining accounts. So we were, it was slightly cumbersome. So about 45% of the money was being paid in rupees, and about 55% was being paid in hard currency, which was a deferred payment.
Yes.
Now, after the sanctions were lifted, Iran was asking for the payments we made in hard currency. So that was, of course, not a problem. But now, as Ambassador Sood has mentioned, if the hard sanctions are going to come in by about November, and there is going to be an expectation that the oil imports from Iran also come down very significantly, this would prove to be a problem. But on the other hand, if you look at it as an opportunity, Iran may supply oil and accept the payment in rupees, and there could be again a kind of a barter trade. With the rupees they can buy Indian goods. Okay. Rice being one of the principal products that they buy, medicines, other kinds of products, they buy a lot of goods from India. Okay,
but nowhere near 9 billion that India buys by way of crude.
No.
So, so that will still leave India a much smaller buyer if the sanctions were to apply. Well, let me quickly go to Mark Toe and ask him how he expects the crude oil market itself to react. Mark, what's your sense? Do you think Iran will be able to export a little more than it could in the pre-2015 period, simply because there is probably a larger volume of renminbi trade and a larger perhaps a little bit of rupee-denominated trade? Or do we get back simply to the pre-2015 period?
Thanks for having me. I think Donald Trump has been an uncertainty for the market participants since last year. I think for oil prices, I'm not quite surprised by what he is now saying. And I think that the reduced supply, overall speaking, will promote the oil price. And I think at this moment, and actually, I have been very positive, very bullish on oil price for the past few quarters. I think $70 for NYMEX should be a very good support level. 75 should be reachable by the end of this month.
And for Brent, you would expect 80?
Yeah, sure. I think the overall structure for the deal, or the lack thereof, I think has already indicated that 80 should be a very reasonable target for the coming few quarters.
Okay. And do you expect that Iran will be able to work around this through, maybe longer-term contracts, suppliers' credit, buyers' credit, to countries like India and China, who are large buyers from Iran? Is it possible at all that they will be able to work their way around this?
Exactly. I think it is a very good response by the countries that you have mentioned. But overall speaking, I think the United States are going to exert a very high pressure to any party that is going to help or assist.
Okay. Well, therefore, to come back to you, Ambassador Sood, what do you think? What are the options with India? Are we absolutely back to the pre-2015 period and just that little bit of rupee-denominated trade or barter trade with Iran? Will life return to exactly the pre-2015 period?
Well, there are a couple of differences here. First is that in the run-up to the 2015 agreement on July 2015, there was almost an international consensus on tightening of sanctions, and China was playing ball as well, as was South Korea certainly, and India. We had cut down our oil imports from Iran considerably in the run-up to the 2015 deal. Today, that particular consensus has frayed to a certain extent. The Europeans, for whatever, I mean, while I don't lay much store by their ability, but nonetheless what will happen is that there is a growing unhappiness in Europe. Particularly you saw Macron, President Macron of France, you saw Chancellor Merkel, and then you saw Boris Johnson of UK. All three of them there in the week, and during last week, talking to President Trump about the need for keeping the deal alive and then building upon it. In terms of other concerns which they said they shared with the US. Now that consensus has frayed. Secondly, China and the US relationship is a little more turbulent relationship, as is certainly the US-Russia relationship. Thirdly, while President Obama described the JCPOA as a political commitment and not as an agreement, because that would have required Senate ratification, which he knew he did not, he would be unable to obtain, given his tense relationship with the US Senate. Nonetheless, the deal was part of a unanimous resolution of the UN Security Council under Chapter 7, Resolution 2231, which makes it international law. So in that sense, it is more than just an agreement between the signatories or the parties to the agreement, which was P5+1 and Iran and the EU, but it is actually international law. So in that sense, the US is turning its back, and Bolton made it very clear when he said, we do not recognize the JCPOA, and therefore we will not go back to the UN Security Council because we don't recognize its relevance. Our decision is a national US decision. So obviously anybody who is going to have to do deals with the US will have to do bilateral deals, which is exactly Trump's way of proceeding, because as you know, he prides himself on being the master of the art of the deal.
Okay, now this makes the whole thing a little more complicated because it's no longer international law. It's the biggest economy and the biggest politically relevant country turning its back on international law altogether. So where does that leave India in terms of bilateral relationships with both the United States and Iran? That discussion in a minute with my guests. We have to take a very quick break. We are back.